Oh man, so Bitcoin continues to break down from the bearish pattern which I shared with you yesterday, and we can see now that Bitcoin wicked below 40,000 for the first time in a little while. Should we be worried? Should we look at the downside risk? We're going to take a look at the Bitcoin charts. I'm going to give you the key levels which we need to watch out for, and we're going to touch upon some of the macro elements. So make sure you stay tuned, because I'm going to share with you at what point I flip back bearish on Bitcoin. So please stay tuned till the very end. As always, don't forget to support NordVPN, who've been kind enough to offer all you guys in this community up to 70% off of a 2-year plan. So you get a 2-year plan. They throw a month in for free. You've got 25 months of a VPN subscription for about $2-3 a month. So you're talking $50-ish for 2 years of coverage, complete anonymity. You can use it when you're streaming on Netflix to get shows from different countries. You can use it for gaming, but obviously for crypto to stay safe, to make sure your IP is masked. I use it every time I log into an exchange or a wallet. I make sure I do so via VPN. It's the first point of call, and it's the absolute basics you should be doing to protect yourself online. So make sure you get yourself set up on a VPN. Now, what can we see here in the Bitcoin charts? And as we can see in the Bitcoin chart, this is the daily chart. And you'll remember I brought everybody's attention to this dangerous pattern, okay? And we can see that we were forming this M pattern here. Okay, now I pointed this out before we touched the neckline at 41,659, and you can see since we have fallen quite substantially down to as low. Today we wicked as low as 39,633. Okay, so this is breaking out to the downside, and for whatever reason, guys, when I put in the title Bitcoin, this is dangerous, people wanted to think I was lying or this was clickbait. No, I saw this in the charts. I had to make this very clear to you guys that yes, even though I have a bullish bias right now and we've not created a lower low, I still need to point out to you when I see a significant move to the downside, and when I can see M pattern forming on a daily chart, okay, where we've struggled to create a higher high on the second part of the M, okay, so you have an M pattern where the second part of the M, the second triangle, is lower than the first one. I had to point this out to you. When you add the macroeconomic uncertainty in the markets, there was absolutely no reason for me to not tell you that this was a risk to the downside. We could see the escalating tensions with the Russia situations. At the moment, there is no respite in this, right? We know we had the CPI fears. On top of that, we have the interest rate hikes on the March 16th. And then this Russia fear is not letting off right now. The perfect situation for us right now, the best case scenario, because it's always important to think about the worst case and the best case. The worst case scenario is we head to all out war, okay? And that is what the market's trying to price in, because we're hearing all this rhetoric about us heading to war. So the market is trying to price that in. But the best situation would be if we now come out and get a formal ceasefire, right? Like a formal agreement that nothing is going to happen. We're not going to war. And in that instance, all of this pricing in that has happened will get unwound, and we can see a nice rally in stocks and crypto and Bitcoin to the upside, which would be interesting. But right now, at the time of recording this, we've got the Dow Jones opening up plus 0.15, 0.17 in the S&P and minus 0.12. This is flat, guys. Very flat, very tentative. The Wix has cooled off a little bit since yesterday. Let's take a look at the Fear and Greed Index, and Fear and Greed Index is sitting at 30, okay? Big drop off from 52 yesterday. That's a big fall. And remember, this fall happens because we broke down from the pattern. We lost those levels at 42, 43, 44, where we were playing around for quite a while in this pattern. Now we've fallen back to a level which was the level that we had the big pump through, okay? So we're no longer at these consolidated levels where we were fighting in this position. Now we're back halfway, almost retracing to the pump we had on the 4th of Feb when we had this big breakout. The worrying side now is on our daily. This candle here from yesterday, 17th of February, big red day, has closed below the EMA ribbon, and now we're getting a further red candle. We've got another 8 hours left of this candle. It's a volatile market. We don't know whether it's going to close red or green, but it's still going to, you can tell, it's still going to close below 41659, and if it does so, we continue to remain bearish on this daily pattern. But to look at the macro trend, and this is what's important, I continue to maintain that we're still on an uptrend as long as we don't create a low below this low of this candle here. So the low of this candle is 36,259. As long as we don't go below 36,259, as long as we can curl before then, so let's say we did something like this and we use 39,150 to bounce and create a higher high and then continued on our way, that is perfectly fine. That's still a good uptrend. This would just be the downside of that uptrend before we can rotate and head to the upside. Now, the technical pattern from our head and shoulders pattern shows 37,546, which in itself wouldn't be the lower low. It'd still be a higher low, which is good. So as long as we can turn around either before this technical target or even at the technical target, we can be good, as long as we then rotate and post a higher high. But we really do need to break through 45 at the next time of trying in order to create that higher high and really push on, because it was this 45 point here at this rejection point, which is where things started to head downhill. Now, obviously, at this point, we had the CPI reading, we had this FUD emergency Fed meeting, which wasn't, and then we had the Ukraine and Russia tensions on that Friday after CPI, which really catalyzed all this to the downside. We had a brief rally here and recovery as we thought that Russia was going to remove their troops, and then we found out that wasn't the case and thrown back down. So a lot of volatility in the market. Remember, guys, I called this about 2 weeks ago that we're going to get volatility between now and March 16th. A whole bunch of issues happening. We know the geopolitical issues. On top of that, the macroeconomic issues in terms of CPI and inflations and the first interest rate hike. The market is going to be risk off until March 16th. Absolutely, that's my view on this. It's not going to change. And speaking of which, speaking of volatility, here's what's happening where I am in London right now, guys. Just to give you an idea of what's going on, we've got someone here live streaming this storm which we have. You've got aeroplanes struggling to land and aborting their landings here at London Heathrow. You've got one of the bigger buildings here in the UK, the O2 Arena, which was also known as the Millennium Dome. The roof got completely ripped off by 125 miles per hour winds. So yeah, absolutely crazy where we're at now. Let's take a quick look here at the Bitcoin chart just to kind of zoom out and get some perspective on this, because as you can actually, before we do that, let's go into the hourly first and then we'll zoom out to the weekly. But here on the hourly, you can see it's been it's been a day of downside here, and you can see that from this point here yesterday at 8 a.m. yesterday was a big red day, and then from today you can see we tried to briefly rally to the upside, thrown down. You can see the candle just there an hour ago really wicking us below 49. I mean, let's see if I can show you this there. This candle here really did wick us all the way down to 39,633. A lot of people getting liquidated. And if you look, this is the short-term trend line pattern. Remember where we were getting resistance from this violet line here? We broke out to the upside, we ran, and now we're getting a bump and run pattern almost here, where hopefully we can bounce off this trend line here, which ties in with 40,000 important support level. Hopefully we can run to the upside and work our way back to 41,659. But as I said, from the one daily chart, you can see what my price targets are to the downside, just to prepare ourselves in case we get any significant pullbacks. Let's also take a look at the weekly. We could see that on the daily, when I showed it to you, we flipped our EMA bearish, and here you can see we continue to remain bearish. And this is the worrying sign for me here, guys, that I wanted to mention to you. The worrying sign for me here is, let's see if I can get a cleaner chart actually. Yes, use this one. Perfect. So if so what we can see here is when we broke down, so here we were okay, right? So we broke down here from our EMA ribbon on the weekly, big candle all the way down to 32. Recovery, now rejected again. So at no point on our weekly EMA candle were we able to flip back bullish. We weren't able to get above this line here, by the way, which coincides with our 0.5 Fibonacci level on our swing low to swing high, which is 46,995. Call it 47,000. 47,000, a close above 47,000 would give us our flip of our weekly EMA ribbon, which would set us up for an explosive move to the upside. But the bears were able to suppress us. The macroeconomic issues were able to keep us down. And now the worrying sign is, will this create our lower low? That's what we need to watch out for. And like I said, I showed you that on the daily chart, my alarm bells will start ringing if we are unable to rotate from this pivot here. This pivot here at about 36, let's give you the exact number here. This pivot at 36,264. Okay, if we're unable to bounce off this level, we create a low below this pivot where my cursor is right now, then we could be going to test 32 again. Okay, now naturally we don't know what's going to happen with the macroeconomy, and this is the challenge right now in today's market. If the escalation of these aggressions continue, if the war rhetoric continues, if the stock market continues to see and then the stock market will continue to see downside, right? There'll continue to be volatility, there'll continue to be uncertainty, and crypto will sell off. That's how it works at this point. But we do need to keep an eye on what happens. Like I said, the best case scenario now is if we get some sort of a verbal agreement that nothing's going to happen, we're not going to war, then I can see a really quick pump to the upside, counteracting all of this negativity that has been priced into the market. So there you have it, guys. We have a storm in London, we've got a storm in the Bitcoin price and the wider macroeconomy. Hope you guys enjoyed this video, as always, in this blend between technical and fundamental analysis. If you appreciate this type of content, please make sure you're smashing up the like button and subscribe. Can we get 150 likes on this video? That would be super awesome, guys, if we can get 150 likes on this video. As always, please don't forget to support NordVPN, who've been kind enough to offer us an amazing deal with coupon code OLDMAN on getting yourself set up on a VPN. Links in the description. At least click the link in the description and see how much data NordVPN, as any company out there publicly, can find out about you from your unmasked IP address. Okay, that will at least give you an education of what's happening out there. Hope you guys enjoyed this video. Thanks for watching. We'll see you in the next one.